Good morning, everyone, and welcome to the European crossover webinar. Sorry about the delay. I was just getting a little bit of research work done. This was going in prep for the NFP. Obviously, the big news yesterday was, with the ECB, with the quantitative easing. And that's why I argued the whole point why I wanted to go in and be short going into that meeting. I didn't think that there's no way I ever thought that they would actually take action, but I thought that Draghi would have to go on and push as hard as he could verbally, that is, to at the very least, indicate that they were ready to go on and take additional action. So that was the only what I thought that would take place. But I thought that he'd do whatever he could to go in and talk down the dollar, and that's why I was saying not the dollar but the euro dollar, because that horse had already gotten out of the gate, and that horse was going down the road, and he had a chance to run as fast as he could and bring, or in this case, rein in that horse. If he didn't, that horse was gone. And so if he didn't, obviously they took action, but if he didn't, at the very least, forcefully indicate that they're ready to take additional action, I thought the euro was going to go on and take off at that point. Obviously, he made sure that they try to pull it in from where, to keep it from making another run back up to that 114 area, which is essentially what I think would have ultimately happened had he had not taken action. So that's what we had there on that front. I don't know if there's really that much news. I see here Germany Scheibel. Instead, we have a problem of bubbles forming. I don't think there's any real news to speak of. We've got France consumer confidence. That was down one. Like I told you, France, all they ever do is underperform. So that's really no news. Let's see. Swiss CPI. We've got non-farm payrolls, which Reuters poll is expected to come in at 220. Private payrolls 215. Let's take a look. Government payrolls 5. Actually, nothing on government payrolls. That's going to be manufacturing payrolls. So the poll would be down just a little bit. Unemployment rate, they're expecting to tick down to 5.2. Average hourly earnings, a gain of 0.2. Average hours worked 34.5. Also, we have a Canadian employment too, so that'll be interesting there. And then we have Canadian IV PMI. But obviously, the big, what's going to be the big driver is going to be the non-farm payroll. And dollar yen is certainly weaker this morning, and it's taking quite a decent pullback. So let's go on and get into the analysis and see where we're going to go on and do business, or want to do business on this report. So here we are on the euro dollar. Get rid of this one here. And I think obviously this NFP is going to be huge because I think that if it's a good NFP, a very good NFP, I'll say a very good NFP, that's obviously going to put potential September rate hike, increase those odds and put it definitely on the table. If we come in weaker, if we come in like, let's say 150, 135, it definitely takes September right off the table and basically just guarantees nothing happens until December. I don't think that anything's going to happen in September, but it'll certainly go and put that. I mean, we're looking here on a 2-hour chart, and this 1008 I think is going to be key, the 78%, but we can go on and move into the 30-minute chart just to go on and get a better idea on where we would go on and run to do business, because these moves have been so big that it's, you can go and pick a level, but I think it's a little bit clearer on the 30-minute chart. So let's move into there. And this is where I've focused most of my work, getting ready for NFP. So I came up with a couple of zones where I think that are going to be important. Let's go and pull this out. This is what I'm looking for. If we get a subpar NFP, then I think that the key zone, and I've got these marked off in this indigo color, is going to be this 1212 to 1237. If you look here on this 1237 up here, which is the top of this ridge, because it is already a zone, so I don't say zone, but it's a zone, but I'm saying you can see here a ridge of some pretty good activity, which is support, resistance, support, battlefield, and then we break lower than resistance, and then we really, obviously we drop lower. This is going to be key, and at the same token, 1236 is going to be the 23%, which I don't think is as key, but just gives you some perspective, is the key from yesterday's low, which is 1088, all the way to the high that we had 2 Mondays ago, 1703. But more importantly, 1239 is also the 61% of 1008 to this recent swing high of 1333. So you've got basically a triple confluence here. I think that's going to be a very key area. So you're going to, any rallies into this, obviously depending on what we were to see. Obviously, if we saw something like, not going to go and see that, but let's say we saw something we lost jobs, then you'd be shooting up here into the moon, 13.5, or actually 1323 would be something like that. But realistically, what you're looking at, if we get something like 170, 160, I've seen some guesses on that. Personally, I think that the report would be good, but I know that I've seen a lot of stuff posted about seasonal weakness in August and how August is, come in pretty short for the last few years. So, I mean, I'm not giving any guesses. My initial thinking would be that the report would be good because we'll continue to see the strength of the remaining part of the summer play in before all this Asian stuff happened. I don't know. Like I said, my thinking is it'll be good, but when you look at the seasonals, then maybe it could come in a little weaker, and that's why I'm going into the meeting flat. I'm not going to have any exposure whatsoever across the board on any trades, regardless whether they're dollar or commodities or anything. I'd rather see how the market plays out because I think that's going to be the key significance. Because if we came in with something like 135, then you get the knee jerk definitely because the dollar's not going to, I mean, they're not going to raise rates, which I don't think is going to happen. But I'm saying if we came in something like 135, 140, that would be a little bit scary. And we'd get a big rally in the euro. We pull back, but ultimately I think that we'll eventually start working lower, because at that point then you have to think, wow, now you're really looking at potentially a global slowdown. Although I think they'll still be waiting on the dollar, but it'll probably just even put further pressure on euro versus the dollar. So, but we'll have to see how that would go on and play out. But within reasonable expectations, where the downside would be maybe in the 160s, 170s, then I think runs up here to this 1237-ish area, the zone of 1212 to 1237, and you've got a triple confluence, are definitely going to be sold into. On the downside, which is also important, let's go and look at that. So if we get a good, strong NFP or fairly favorable, I'm not saying anything like 288 or something, that's going to be pretty crazy. If we get something like that, I think it's going to be, my gut was it'd be firm. But if we got something, really wacko like that, then it's really going to, all bets are off in the sense that you're going to shoot through a lot of levels of support. But on the idea that we get a pretty favorable NFP, something like, 230, 240 on the upside, and then we're going to go on and make a trip down here, and 1005 is going to be the 78%, but I like this zone for us to get past 10, and you get this zone between 974 and 989. And I'll show you where I'm looking at here. You see right here? Got a lot of good activity here. So I like the market overshooting it and then coming right in here to this 975. And that would be on a very good report. In the meantime, before you even get there, the key is going to be, you remember this 1058, the old bias pivot on the 30-minute. Now that's just going to turn it one way or the other. But if you remember, as we were going into the FOMC, we had come down here into the 1020s, and I don't remember what the news was, but we got some news ahead of that, an economic report, and we couldn't even press them even any further. And we were just dawdling down here in the lower, not lower, but the mid 1020s. So this would be your first key reaction here. Once again, something like this is going to be, closer towards, if we make a move down here towards the lower 110s, it's going to be something along the lines of probably closer to about, almost 250 or a little bit strong. If we get something like a 275, then that's the extreme where I think here you want to be getting out of everything, covering everything down here. You'll do what you want, but I'm just saying from my perspective, I'd be covering everything. If you have anything, I'm not holding anything going to NFP, but I'd be looking on a scalp to go and be a buyer down here, because then I think we'd get a rally, and a nice rally, and that rally would probably take us up towards this 1058, and then we'd go and work lower. So that's my idea, is that these are the two ranges that I'm looking at on the upside and the downside, depending on the strength of the report. If we get a subpar report, I'm looking to go in and fade against this 1239-ish area. We might run out of gas. I mean, you're just going to have to see, because one of the things is going to be not only the report, but you're going to have to look at hourly earnings, because if hourly earnings come in subpar, and I'm surprised to see the SPOOs this week, I really am. But if we come in subpar on the earnings, let's say the earnings come in flat, then that's definitely going to go in and kill any September. So you could see something like, let's say you could see a 230 print, which will actually run it up in here, but then you see the hourly earnings are flat. That's going to send is going to go in and in that case, obviously, it's going to push the euro. But what I'm looking for is essentially the opposite, where you go in and see. I'll give you an example where it may not even make it up here. Let's say you see a 210 print, which will go in and send the euro higher, but then you see you see the hourly earnings flat. Well, then nothing's going to go in and happen at that point here, or as I said, a 210 print. Getting all confused. A 210 print, but you see hourly earnings at 0.3, then that's going to send the euro right back down, because it's going to go in and put a lot more pressure on them to go in and take action on the September meeting. So like I said, if you see a print, this is what I was talking about, where we may not make it to the 1239, let's say we see a print of 205 or 202, which is a little bit subpar, not much. So we rally up, but as we're rallying, then you see that the average hourly earnings are actually flat. Then that's going to kill it. So it would rally up, and then you see the hourly earnings came in at flat. Boom, we're going to go on it. Turns around and just knocks it down. Like I said, I'm getting all over the place, trying to mix in all these scenarios, but I think that, like I said, it depends on the print, going all over the place. Probably should have written all these different scenarios down. But on a decent print, we're going to go in and come back, put on some additional pressure. But I think this 1034 on a pretty good large print, then you're going to go in and see him test this 1005. And I like this area because the problem is that we've already got a lot of shorter area, an idea that the year's really going to take a tumble. So that my thinking would be that they're going to go and accentuate the downside. And going back to this about where we may not make it to this print here is if we were to get a subpar print, barely subpar. Let's say we get 195. So that sends the euro higher, but the average hourly earnings are like 0.3. I know they're looking for 0.2. That's a Reuters poll. But if the hourly earnings come in, let's say at 0.3, that would put the pressure on the FOMC to react. So even though we came in with a minor subpar print, that would take the wind out of the sails real fast, and we'd come back down. That's why it's going to be so important to look at not only the print. Don't worry about the unemployment rate. That's really not going to be that important. It might even get to 5.1, which is probably going to be dollar favorable. But what's going to be key is going to be the jobs growth and also hourly earnings. So if we get a subpar jobs growth of 190, which sends the euro rallying, but you got average hourly earnings shooting up to 0.3, which they're expecting to 0.2, but 0.3 would be very, very nice. Then that's going to take the wind out of the sails very quickly. And it's the same thing here on the downside. If we see a strong, reasonably strong print, let's say we see something like 245. So that sends the euro dollar lower, probably sub this 1058, coming in this 1034. But the average hourly earnings coming in at flat, then that's going to turn around and bring the euro dollar right back up. I mean, it sounds like I'm throwing in a lot of variables, but you're going to have to not only have your levels here, but the way you're going to be able to successfully trade this report, or at the very least, even if you're not trading it, what you're going to be looking for, the key things are going to be, two key things is always going to be the payrolls and the hourly earnings. Depending on how that comes out, they're looking for 0.2. Obviously, if you got something like 0.3, that puts the pressure on the FOMC to act in September. Although I don't think that's the case, will be the case. You have to go in and price that in. And the only variable is, do you get a good NFP payrolls number with a very subpar, let's say a flat-ish reading on manufacturing, on average hourly earnings? Then once again, the way you play between those two things is going to go on to be the difference of where you see these swings here. So those are the two key things. Obviously, any kind of back revisions is going to go on and make a difference, but without going in a whole bunch of details, and probably would be, I mean, most of the stuff I'm just going to keep my head on how to react, but it wouldn't be a good idea for, I mean, it would be a good idea for you to go on and write the job growth and the hourly earnings, and then have little scenarios on how you would go on and play that, knowing that if you get a good job growth, but you get a flat average hourly earnings, then that's going to go on and weigh on the dollar. And trying to look at the extreme on the other side, let's say you get a subpar, not a very weak, but a subpar, let's say 188, which is going to send the euro rallying, but the average hourly earnings ticks up to 0.3, that's going to send the dollar back down. In that situation, let's say you get something like 188, but you get the average hourly earnings shoot up to 0.3, then you probably may not even make it here to this 1239. That's, I guess, what I'm trying to say in a roundabout way is you want to look at these extremes, but if you see something like where the average hourly earnings jumps up to 0.3, then you probably shouldn't be too chinchy in the sense that you're trying to wait only for 1239. If I see something like that, then I'm selling it right here in that zone when I look at those average hourly earnings. Like I said, we'll have to see how that all plays out. But this is what I'm looking for to go on and recap here. Obviously, the focus of my trading is going to be primarily in the euro dollar. But these are your two zones here, 1212 to 1237 with these two fibs, a confluence here. And then on the downside, the bar, if you notice here, if you look here, you said the zone here isn't too high, whereas the zone down here on the support side is much lower. Well, the reason that is because after the ECB took that action, there's going to be a greater force of people wanting to take the short side. So you don't want to be coming in too early. Plus, also, we're not that far away from this bias pivot, but the real action was taking place in the 1020s. So if we get a very good number, they're going to blow through all that stuff to test the stops. This 78% is just going to be, a nice marker, but it's not going to hold it. Where you'd be wanting to do business on that is right here in this zone. Because don't forget, the market is bent to the short side. So you're going to see farther extreme moves on the downside as opposed to the upside. And right now, the way that the market's set up, everybody wants to sell it on rallies. So once again, if we get a poor number, you want to do business in this zone. And, if you can come up here to this 1239, 1237, fantastic. Just know that if you get a subpar number, but the average hourly earnings jumps up to 0.3, then chances are you won't even make it to this 1239. Market probably run out of gas like in the 1220s, 1217s or something. So anyway, that's just what I was trying to want to convey, as opposed to just telling you, here's a buy area, here's a sell area, and here's a fib, and good luck to you. Obviously, there's a lot more machinations or intricacies going on when you're trading NFP. And the way to successfully trade NFP is to go and see the guts of the number. It's the same way that when if you're trading FOMC, you look for those little statements or deletions of statements, and they can go on and turn the market where you're able to go and buy as the market's falling down. I'm talking about in an FOMC or whatever. So you look for those changes or deletions of text or statement, what they're stating, that's going to go on and allow you to step in and say, oh yeah, I can go on and buy it here. Oh yes, I can go and short it here. Well, obviously it's different with NFP because you're just looking at straight up data. In some ways it's simpler, but what you're doing is you're obviously taking a look at the outlook and the implications of the outlook, in this case for the FOMC, but you're looking for those key little bits. Obviously the headline number is going to be the attention grabber, but right there is going to be our average hourly earnings, because if they come in flat, that's going to kill the FOMC from being able to go and do anything for September. That's it, game over. But you have to go in and temper that. So like I said, if we see subpar number and the euro rallies, but the average hourly earnings, average hourly earnings comes in at 0.3, well, that's going to kill this rally toot sweet. So anyway, that's all that we got here on the euro dollar. I'll go and take a look at some questions. Dan says the dollar yen looks like it's on the ropes, which is fine. I'm short 3 positions from average cost, just above 123. What's your take on the dollar yen? Man, that thing still remains weak. And like I said, I've I've tried to go and get short that a few times at some good levels, and it's just flat out missed me. Let's see, and we'll look at I've also have some levels set up of where we want to do business on dollar yen. Those are the 2 currencies that I think they're going to be key, and really that's what I'm focusing my attention on. Sometimes I was going to trade the SPOOs or the crude or whatever. On a day like this, I'm not looking at that other stuff. We'll obviously look at SPOOs, and we're coming in here into this bias pivot here, not pivot, but this. Well, it is a pivot on the 4-hour. But this zone here, 1825.22, and we did get some short covering. I didn't even notice that, but you would have gone and wanted to cover into this little zone here. You see I've got that 1825 to 22. We're bounced, not that much high, but we bounced up 3 handles from that level. Daryl says, I'm keeping an eye on the CAD's job too. Imagine bad NFP and good CAD report. CAD may fall 200 to 300 pips. The other way around, and the pair may go to 134, 135 in a heartbeat. Yeah, I'm just looking at really just the NFP side. I don't see how you're going to get a good CAD number. It just the CAD number, in light of what's happening crude, would be subjective in the sense that you would say, wow, it's not so bad, so I mean it's good. So no, I don't see that happening. Although, like I said, I think you can see the dollar CAD pull back if we get a weak U.S. number. But I think your greater focus is on the NFP, and then you can just look at the headline print of dollar CAD. So it's already break time. So let's go in and we'll go in and take a look here. And like I told you, the focus has been here on the 30 minutes. So on the 4 hours, it's hard to, at least to go in and get a good feel of what is, from a day trading standpoint. So we're going to go on break, but we'll go in and take a look at where we stand here on dollar yen. And I didn't mean to sound so long-winded on the outlook for the euro, but I'm just trying to, explain to you how I think it's going to be important to successfully trade it, which you'd be one to look for. I mean, I have no idea how that number is going to play out, and I had initial convictions, or initial gut reaction was it was going to be a good number, but everybody's pointing to the the seasonal weakness. Now, when I trade, I really don't even follow very many people. I pretty much stick to my own work, but I look at other people for a sentiment gauge, but I'm not waffling on my gut reaction. I'm just trying to, be realistic, because you never know how these numbers are going to go in and come out. I think it's going to be a decent number, but I don't want to go in with that mindset. It's going to be a good number. It's going to be a good number. I don't care what anybody says. And then I see this weak number. I'm trying to think, well, what the hell am I supposed to do? I think it's going to be a decent number, but I want to come in with an open mind saying, hey, you know what? We might even come in subpar, 165. Okay, under that scenario, what do I do at 165? Well, I look at the average hourly earnings, and if they're up at 0.3, then I know that I want to be, buying the dollar on any dip back. So you want to go and have an idea or a conviction, potentially not necessarily in the NFP, but it's good to have a pretty good thought of what you believe is going to happen and kind of somewhat stand by it. But there's a lot of moving parts in this NFP, so you have to be really workable to go on and successfully go on and trade it, to be willing to say, you know what, I think it's going to come in stronger, but if it comes in weaker, hey, that could happen. And if it comes in weaker, let me look at the guts of the number to see what happens. Back revisions will be important if they're of significance, but I think more importantly is going to be the weight of the average hourly earnings against the the headline figure. So let's go and take a break. We'll be back, and thanks for joining us here on the European crossover. Okay, everyone, and welcome back to the European crossover webinar. And I brought up here the dollar yen on the 30-minute chart. Pull this back up a little bit. So these are the zones that I have of interest. I've got them marked off in this little indigo color. On the upside, I'm looking at 2063. If you see this area, this 2041 to 2064, this zone here, if we get a good NFP, which is obviously going to be dollar favorable, we're going to see a rally in dollar yen, and a good area to go and do business if you're long, and you're looking to lop off, or you're looking to go and put on some shorts. This area between 2041 to 2064 is going to be a good zone. 2063 happens to be the 61% of this recent low we just set here of 1882 to 2175 up here. Now that was the high this last Friday as we were going right into the close of New York FX. But once again, like I said, if you look here, and I try to back it out so you can get a little bit better idea of where that would coming from, you can see how the market had fallen down, and we found this support. This 2041 has been a key level from way back, okay? But we held here, and now support. As we break here and you rally back up, lo and behold, previous support here, and it's a big level, becomes resistance. So we come back here, we fall, we challenge it, we dip, we challenge again, finally we get above it and we make a move up here. And then on the way back down, 2041 is a battle zone. We fall back, it's resistance. We come back and we get above it, but we can't stomach a move very much higher beyond that. That's when we run out of gas up here at this 2064, and then since then we've gone and fallen back. So moves back up here is going to be a pretty good area right here as far as trying to take business or trying to take it to the other side. On a pretty good report, I could see where we go and overshoot it a little bit, and that would go and take us right into here. Which is going to be 2078. We can go in and mark that off. I like to go in and mark off my charts. It's a, I don't want to say it's a hassle, but it is time consuming. But I tell you what, it makes it so much easier for me, because one of the things that helps me is that when I mark these off, I remember these levels really well. The same way that I tell you about how when we came down here in the euro and we dawdled around in this 10, and I can remember specific numbers or levels very well, because it basically, having this print up, it almost associates it. It pops up in my head. I remember the action in the mid 1020s. So having these numbers here, sometimes if the market has been trading way up here and then we turn around and we fall apart, if I already have these numbers marked off, it makes it a lot easier for me just to come in. And when I mark those numbers off, it basically almost like an association to, yeah, I remember that number. It was so key because of whatever happened on this day or that report. So as I said, on the upside, on a pretty good report, and that's going to be a pretty good run-up, though, if you think about it. That's going to be a hell of a run-up. But it would be a good area right here to take the other side on a little bit of an overshoot. We got this 2078. Now, on the downside, I'm just looking at the levels right in here. We had some pretty good action. I'll probably open this up just a little bit, probably be easier to see.